Raghuram Rajan has not let up on his anti-inflationary stance, but he's done his bit to add to the feel-good factor. A surprise cut in the statutory liquidity ratio and a somewhat dovish outlook have cheered bankers as well as market watchers.
We do not know at this moment about what the monsoon is going to be, and the new budget is yet to be unveiled. Therefore, any decision to change the policy rate will have to wait on these things.
The central bank says that there may not be any further rate hikes if the economy stays the course from here on. Not just that, Rajan for the first time said that he may in fact look at easing rates if inflation eases faster than expected. He's also given credit to the decisive election mandate, saying that it should create a conducive policy environment going forward. Today's SLR cut potentially frees up more than 39,000 crore rupees that banks are forced to park in government securities. And the RBI hopes that these funds will be used to lend to the private sector.
The 50 basis point cut in the SLR does indeed open up the room for banks to cut rates and lend more. But given the fact that most of them are sitting on excess SLR, will they actually do that is something that remains to be seen.
In the short term, I would say rates are unlikely to go down. At this point, I can actually see my cost of funds going up a little bit. If I am not able to release the SLR and there is very little credit demand.
It is giving flexibility to banks in terms of trying to make sure whatever credit demand comes through, they are in a better position to meet it without resorting to incremental financings.
Even so, Rajan has put in a number of caveats to his guidance, the biggest of which is the uncertainty stemming from a delayed monsoon. Clearly, a lot still depends on the steps to be taken by the new government, and all eyes are back on New Delhi in anticipation on the budget. With Anirudh Ghosh, Simran Gill, ET Now, Mumbai.